Well, a stellar report card for Singapore state investor Temasek's performance in its financial year ended the 31st of March. Its net portfolio value hit a record 403 billion Singapore dollars. But global market volatility brought total shareholder return down to 5.81%. That's down from 24.53% the previous year. Or still, the 10-year and 20-year return to shareholders stayed constant at 7% and 8%. Temasek invested 61 billion Singapore dollars. That's more than the $49 billion a year ago. Well, these went into firms positioned for long-term structural growth, like health tech company BioNTech and online game platform Roblox. It also divested less than 37 billion Singapore dollars. Temasek is also heavily invested in Asia. Singapore is now its largest market by exposure. That's followed by China, which slipped to second because of a drop in market value of its portfolio. The financial services remain its largest investment sector over the year. It also put money into assets like Singapore Airlines and Sembcorp Marine. Such moves have increased its share in the transportation and industrials sectors. Unlisted assets like Mapletree, SP Group and PSA also made up more than half of its total portfolio. The rate of return for these is 16.2% over a 20-year period. Now, that far outperforms the 6.7% of listed assets. Still, one analyst believes that tough times lie ahead.
I think we should expect, obviously, a slowdown. I think Temasek has reported as of March 31st. But as we all know, the quarter from March 31st to June 30 was already very bad. So that is going to be taken into account in FY23 for Temasek. So let's see what the other three quarters perform like. But it's probably going to be a very difficult year for all state investors in general.
And Michelle Teo has been following this disclosure from Temasek, and she joins us live. Michelle, explain this to me. Total shareholder return from 24.53% the year before to 5.81%. To a layperson like myself, that is a very big drop. Have I got that wrong?
You know what, Wei Su, you're not wrong, but the 24% that we saw in 2021 is actually out of the norm. You could say the same in 2020 when the shareholder return was actually negative 2.28%. So if you look at it in the context of the long-term time frame that Temasek usually takes, these figures average out. So like you mentioned earlier, 10-year return 7%, 20-year return 8%. Not that very far off from the numbers that we're seeing today. Now, one thing we should note, though, is that the performance for this year is for the period ended March 31st. And if you recall, the Ukraine war started in late February, and that set off a wave of supply chain disruptions and an energy crisis that we are still feeling today. So the question here is how Temasek's portfolio will be impacted from here on now, and whether it can sustain this growth momentum.
Michelle, in fact, Temasek Holdings, if we can read this into their media release, already promising what you have just said. It says it invests and divests to capture opportunities aligned with long-term structural trends. So this kind of sustainability, for example, are we seeing this in the way it's investing in non-listed assets, which for this time is the largest proportion on record, as you mentioned, as we mentioned earlier when I was talking to you before we had this interview?
Absolutely. So of the 403 billion Singapore dollars of portfolio value, about 210 billion of them are in unlisted assets. And unlisted assets are, for example, brands that we know, Mapletree, PSA, SP Group that you mentioned earlier. It's the first time the proportion of these unlisted assets have actually overtaken listed ones. And this is significant because the rate of returns for these companies has far outperformed that of listed assets over a 20-year time frame. We're talking about 16% versus 6% over 20 years. And especially if you look at early stage companies, which occupies over a quarter of its unlisted portfolio mix, it allows Temasek to then reap the best returns when such companies hit an accelerating growth path. Now, on the flip side, this large investment into unlisted assets also means that Temasek has unfortunately lost some liquidity. One analyst I spoke to earlier says this might not be a good thing, especially as we enter a period of very challenging macroeconomic circumstances.
the private equity portfolio has become very significant. I mean, if you look at investments like Element Materials this year, it was a $7 billion transaction. That is going to add to that illiquid portfolio. So, again, very high, very steep reduction of liquidity, which I think Temasek must be careful with.
Michelle, liquidity, as you mentioned, that might be or might not be a short-term challenge. But the world, as you yourself also suggested, looking at very big changes geopolitically, climate change, the effects of climate change, a war in Ukraine that does not look like it's going to be ending anytime soon, food security issues as well. Singapore's Temasek, our sovereign wealth fund that manages the country's foreign reserves. Do you see any changes now that portend maybe bigger paradigm shifts in the future in terms of how it manages our foreign reserves?
Well, if you're looking at the short-term and long-term impact, in the near term, we're going to see Temasek slowing down its investments. It's taking a more cautious approach given that we're faced with rising inflation and, like you mentioned, a Ukraine war that shows no signs of stopping as yet. But still, Temasek says it will invest in line with its 4 structural trends which guide its investment decisions, and these are digitization, sustainability, future of consumption, and healthcare.
We fundamentally still invest on a bottoms-up basis based on intrinsic value of the company. If we see good opportunities emerging in the public markets aligned to our structural trends, we will certainly consider investing. So when we slow down our investment pace, it doesn't mean no investment.
Now, if you look at Temasek's portfolio, for example, some of its earlier investments have already positioned it to tackle challenges like food security, as you mentioned earlier. But one main trend that we're looking for the future is in Temasek's sustainability metrics. So, in line with its goal to become net zero by 2050, it's raising its internal carbon price from $40 to $50 per ton this year. And by the end of this decade, it wants to increase that to $100 per ton. So putting this price on carbon helps the firm to internalize the cost of carbon emissions, and it will also be a key metric in understanding the profitability of current and future investment decisions. Temasek says new investments must be of lower carbon intensity, such as companies focused on climate change.
And thanks to that, Michelle, our reporter Michelle Teo, filling in all the business blanks for us. Thank you.